Do you know why? Because there is too many fake outs, and it will be difficult if you don't know market structure. It will be difficult for you to trade those lower time frames. Guys, if you would like to know, to learn more about these lower time frames entries, stick around until the end of the video so that you can get something. So that when you get out of here, when you stop watching this video, when you are done watching this video, you can go on the chat and backtest what I have told you, in this video. So guys, uh, welcome to my channel. It's your boy Tangeni once again. So I'm back with another video. Today I'm going to teach you lower time frames entries, guys. Lower time frames entries. So as you can see here, we are on Euro USD. We are on Euro USD, as you can see here, and price did what? Price broke structure. As you can see here, price broke structure to the downside. So meaning that we must only look for sells. We must only look for sells. As you can see here, we are only interested in sells, as you can see here. So buying, I'm not interested in buying. So now for me, I'm waiting for, I will draw my zones here now, my two zones, which we call them supply zones, because we are in a downtrend. So we look for price, we wait for price to do what? We wait for price to mitigate those zones, supply zones, or order blocks, bearish order blocks that we draw, and then we wait for what? We wait for candlestick patterns. We go to the lower time frames for confirmation, for entry confirmation, guys. As you can see here, guys, I draw my two zones. This is a minor supply zone. This one is a major supply zone, which is also called extreme supply zone. So as you can see now, we have to wait now for price to come back at its zone on higher time frame. Let me say my higher time frame is H4 now, as you can see. So I will wait for price to tap in one of those zones and see what price is going to do after tapping in those zones. Is there a reversal when it taps into those two supply zones, or price will go through those supply zones? So as you can see, let's wait and see what price does. Let's go through again. As you can see here, we have what? We have liquidity above where? Above these two double top. So other traders who are trading these patterns, double top and double bottom and those other things, they don't know about this, that most of the time there is liquidity above or below those double tops that they are trading. Sometimes they enter trades when they see a double top or double bottom, they enter trades not knowing that the market makers, the higher banks, the big banks, they know that these guys, they is where us retail traders, we target this, we target this, we trade these patterns, guys. That is double tops and double bottoms, guys. So now they will just, the banks, they just do like this. They go above that zone just to grab liquidity, and it drops. You see, in the market, the price drops. So that sometimes, okay, okay, now let me say like this. Okay, you bought here. Okay, you sold here. You sold here, and you put your stop loss just where? You put your stop loss slightly above this high, this previous high, as you can see there. So sometimes you just put your stop loss there. You put your stop loss there, and you target this Apparently, it's a double top. Okay, price will go in your favor. Obviously, it will go in your favor, and then it will just reverse back up to grab liquidity from where? From this supply zone, which is above here. From this equal highs that are here, there is liquidity which has to be taken for the market to drop. That is how the banks takes you out, guys. That is how the banks takes you out. So let's see what the market does. You see? You see, guys, check here, guys. Check here, guys. Check what the market did. Check what the market did. So if you have put your stop loss here, let me just show it to you nicely. Let me just show it to you nicely so that you can see what is happening there. So if you have put your stop loss just above this high here, this previous high here, just above here, you have been taken out by this move already. You see, the price went up to collect what? To collect liquidity above this equal high, and it dropped. Let's see, let's wait and see. So price already tapped in our supply zone, as you can see here. So now you do what? After price tapping into this supply zone, you do what? Now you go to the lower time frames. You go to the lower time frames to check what happens on the lower time frames. So let's go. Okay, let's check it H1. On H1, okay, as you can see on H1. So I don't care about that one already, because price already tapped in. Price already tapped in the area. So what I'm interested now is for price to come back. You know what do I do now? I'm on H1 now. What do I do? I will go on H1 and draw what? And draw. They do the same thing. I will do the same thing. Draw another supply zone on H1. Draw a supply zone there and wait and I will check what price does. So I will wait for price to come back at that zone. If price didn't come back to that zone, I know what I'm doing. So just watch price, what price is doing now. As you can see, so price went there. What should we do after price going there? After price went there, what should we do after price going there? So this is a lower time frame. It's a H1. So we go to the H3, minute 30. We go to the minute 30. You see that zone that I draw on H1. It's pretty obvious. You know what? Check another scenario here. Check another issue here. So price did what? Price when there is liquidity at this trend line. This is what we call trend line liquidity, guys. It's what we call trend line liquidity, as you can see here. That is trend line liquidity. You know what? Price went where? Price went up to grab liquidity here. So let me go to the next one, to the next time frame again. So let me just delete this one out. Let me just delete this one again out. So let's go to the 15 minutes. So my entries will be on 15 minutes, guys. My entries will be on 15 minutes. So now, looking here now, as you can see here, looking here now. Looking here, this is our zone on where? On 15 minutes. Visible zone. If you could have now, let's continue, guys. So you would have drawn you have withdrawn your refined supplies on M15 here, and you put what? You put a sell here. If price comes back to that zone, then you put your SL at just slightly at the top of this. You know, if price couldn't break this, higher. You know already that price already tapped into this supply zone on H4, as you know. Okay. So now you wait for what? You wait for price to come back at this zone that you draw on M15. That one you draw on M15, you put an entry here after price come back there. You see, as you can see, we got what? We got a bullish engulfing. We got a bullish, a bearish engulfing, guys, as you can see. A bearish engulfing. After a bearish engulfing, you enter. Or you can just enter aggressively. As for me, I only enter aggressively, as you can see. So now let's go to the lower time frames again. Let's go to the lower time frames. So there's no change of character here. So as you can see, there's no change of character, but it's not a problem. So let's continue, guys. Let's continue. Let's wait for price now. What do price do? And you see now, there is a change of character, guys. There is a change of character now. Some of the people they enter after a change of character. So me, I enter aggressively if I see that okay, price came back to the zone, to the supply zone as I did. There is a change of character on a lower time frame. Let me say 30 minutes. It's also a change of character on 15 minutes. So change of character. Now what do you do after a change of character now? You wait for price to do what? You wait for price to come back. There is a change of character. If price doesn't come back, that is not a problem. So long as I know that I've already entered on 15 minute on M15 when price was here, when price tapped into my supply zone on M15. As you can see, you would have been in profit already, guys. You would have been in profit already by this time. So let's go to the H1 and watch what price does. Let me go back to the M15. If price comes back, I'll just put up some extra zones that I know that if price comes back, and then I would also sell. If price comes back, I would sell because there is a change of character already. So if price comes back, I would sell. If it doesn't, I will keep my other trade on. So let's go, guys. Let's continue. Let's continue and watch what price does. So let's continue. So as you can see, change of character happened. So we wait for price. So price didn't go back. Price didn't go back. So price didn't go back. So we wait now. Let's just be patient and watch the market. Okay, just be patient. So as you can see, guys, after price tapping into this supply zone, you know what? That is where the major banks came in now. That is where you must follow these major banks. How? You must follow their footstep, guys. Follow their footstep. When they are entering is when you can enter. When they went to grab liquidity, after grabbing liquidity and you wait for price pattern, candlestick patterns there, and enter, guys, and enter. This was a bearish engulfing candlestick. So after a bearish candlestick pattern, price came back and I sold. I entered on M15. After entering on M15, then price dropped, guys, as you can see there. Price dropped. Now let's wait. Let's just watch what price does. It went and break the low. It continued down. So let's go to the H4. Quickly on H4. So price didn't come back to my zone that I draw on. This is the zone that I was hoping price could do what? I was hoping price could come back at this zone. Then I will put another sell there. So now price didn't come back there. So let's just continue. Now let's wait for price. Price dropped. As I said, guys, if price just went up there to grab what? To grab liquidity. After that, the banks went in. When the banks enter the market, guys, this is what happens when the banks enter the market, guys. This is pure SMC, pure smart money. So now price didn't go back to that zone. So I will delete that one out and wait for another entry if I get an opportunity to enter. So as you can see, guys, check here, guys. Check here. Check, look at the risk reward ratio, guys, of this trade that I took on M15, guys. They say, yeah, SMC, what? SMC gives high risk reward ratio, guys. As you can see, look at these cars. Look at a 1 to 13. Look at that. A 1 to 13, guys. A 1 to 13. A 1 to 13, guys. Look at how tight that stop loss is. Look at how tight it is. Look, guys. Look at how tight that stop loss is. So, so my target was just to to target this low here. That is my target, guys. So a 1 to 15 risk reward ratio, guys. So let's check what price does. Let's just look at the price. Stop loss. I mean TP hit, guys. TP hit. TP hit, guys, and the market reverses. TP already hit and the market reverses, guys. A 1 to 15 reward ratio. Look at how, look at how slim the stop loss is, guys. The stop loss is so tight. A 1 to 15 risk reward ratio. Let's continue and check what price does at this zone, which is here, which I draw here. If it break that zone, then I don't care, I don't mind. So I already got my trade. So that is another supply zone which is on a higher time frame on H4. So I will wait for price. What price does at that zone? As you can see, check, just check how price moved. check how price moved, guys. Check how price moved. So price couldn't go back to that zone. So I missed on that second entry. So we don't worry about that one. I don't mind about that second miss that I missed an entry on the other second supply zone. So we move on. Check. Just look at how price moved, guys. Just look at how price moved. Look at how price moved. Price did what? Price took out this low. If you would have targeted this low here, just look here. If you would have targeted this low here, because as you can know, as you know, price will take out this low because it failed to do what? Price failed to take out this high over here, which is a higher low. So it's a higher low, this one. I mean, it's a higher, it's a lower high. It's a lower high. And that one is a lower low. Now it create another lower high, which is here. So it broke this one because this lower low, as you know, lower lows, they are always taken by the price, as you know. But this time we will look for a sell. So as you can see, we did what? We shifted, market shifted here. It's a change of character. The CHOCH, change of character. So what should we do? We have to find two key areas. We have to find two points, two POIs or supply zones that we have to draw. This one, that's number one, and we have the second one. Now, as for me now, I'm just waiting for price to come back at those two zones and see what is happening there. Because the market is already showed me that it has shifted after this change of character here. So now what I have to do is just watch price. What is price going to do? So check here now. There, if you were one of those people that are not patient, people that are not patient, guys, people that they like to jump into trade, if you see this inducement, you would have done what? You would have placed a sell here and you just put your stop loss maybe somewhere here. Check. You would have sold here and then you put your stop loss just above this high here. So watch price now. Watch price. What price does. You are in profit. You are happy. You are happy like that. And then see, look what happened. Look what happened now. just You were in profit, you were happy like this, you were in profit, and then all of a sudden the market does what? The market pulls back. The market is not done yet. Guys, the market is not done yet. You would think, this one is to induce us little traders to just sell before the big banks, guys. If you sell before the big banks, you are in trouble. If you buy before the big banks, you are in trouble. Your stop loss has been hit like that. So now you do what? Price, you now price later on, price will go in your direction. You were in a right direction, but the problem is you entered where? You entered too early. You entered at the wrong place. You entered at a place that you were not supposed to enter. Hmm? Guys, this is inducement, guys, to induce traders into selling while they know that the banks will push the price back up at a supply zone, which is here or this one. Hmm? So now, look now, you have been taken out of the market by the price, by the big banks now. Because there is liquidity here. There is liquidity to be taken into this supply zone and the market can reverse. So now, let's wait now. So let's play more. Check now. Price reversed. Price reversed after tapping into this uh, supply zone which is up here. So now let's go to the H1, guys. Let's go to the H1. Okay, now looking on H1, guys, don't forget to like the video, share the video, comment down below, guys. The more you comment and the more you like the video, the more it motivates me to create this free content that I'm giving you guys. Hmm? The more you are liking the videos, the more you are sharing the content, the video, the more you are commenting down below your questions. It motivates me to create another video. Give me an idea of what to talk next, what to create next. What do you want me to create next? Comment down below, guys. Comment down below. I will attend to your comments. So now, as you can see, now let's proceed. Price already tapped into this uh, supply zone. I mean, into this supply zone. We have to draw another supply zone because that one was drawn on a higher time frame, which is H4. So now I draw another one on what? On 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 H1. So as you can see, guys, this double top here, there is liquidity here at this double top. That's why you must be careful when you trade those double tops patterns that you say, this one is a double top, this one is a what. Bruh, those double top and double bottoms, guys, there is liquidity there. There is liquidity, there is orders sitting there. There is orders sitting there. There is stop loss and there is sell or buy limits resting there, waiting to be taken by the big banks, by the market, by the price, and then the price goes into your direction. So we draw our supply zone, which is here. So now let's wait now. Let's wait now. We play price now to check what is going on. So let me just play price. If I was someone, I would have entered here. If I was someone, I would have entered here a sell here after this candlestick closer aggressively. Then I will put what? I will put my stop loss where? I will put my stop loss just above this zone. This one on the left, not this one, just this one on the left. So, and I will do what? I will target this low. Sorry guys, my network is a bit laggy. It's lagging, man. I don't know what is going on, but yeah. Okay. I would have entered an aggressive entry after this candle closure, guys. So now let's play price. Look, just look here now. Look here, guys. Look here. Price after just grabbing liquidity on the upper side here, guys. You know what? Price just went straight, you know. Just check here. This is on H1, guys. It's a lower time frame also. So this is on H1. That one would have been a nice entry, guys. Let's look at how my stop loss is 1 to 5, a 1 to 5 risk reward ratio. Because I would have targeted this low here. I would have targeted this low because I knew this low would go a 1 to 5, guys. A 1 to 5 risk reward ratio, guys. So let's wait. Let's just wait. As you can see, guys, what do we do here? What do we do it here? We see a break of structure. If you found the market like this, guys, what do you do? The first thing that you would do is just check the direction of the market, which is bearish, guys. We are breaking structure to the what? To the downside. So we are making lower low and lower highs, lower lows and lower highs. So as you can see here, guys, that one is not something that is difficult to check. If you don't know how to identify the market structure, I suggest you watch more videos on market structure, guys, just to familiarize yourself with the market, with the direction of the market. Now let's look here, guys. So now you see the market is now on the downside. So now I want you to, the second thing is to spot out the supply zones on what? This is a supply zone on daily. It's a high time frame. So you go, you find these two areas, guys. You must find these two areas now. So these are the two areas that I have, these are the two zones that I have drawn. There is an order block which is here because it there is another one. So this one is the most reliable one because it did what? It took out this. It took out, this was the last buy candle before the market dropped. This was also the last buy candle before the market drop. So now I want you to have your eyes on at these two supply zones which I draw. So now what do you do now? You play price now. You play price, you wait until the market comes, until the price comes at that zone, and you move to the lower time frames, guys. Because there's already a break of structure as you can see here. So you wait for price now to come back at that zone. Now, okay, let me just go through again. So if you were other people that are not patient, you see this pullback here. You see this pullback here. You would have drawn your supply here instead of drawing your supply zone at the right place. You would have now entered a sell here and you put your stop loss where? You put your stop loss just above this high. Now, when you enter the market, you thought now you were in profit now. You thought you were in profit. Okay, you are in profit. As you can see, you are happy now that you are in profit. As you can see here. Now, not knowing that this one is inducement. This is to induce you into selling the market before the big bang does. So you have to be patient with the market, guys. Don't just jump in when you see price is reversing, but make sure that the price is reversing at a higher time frame zone, guys. Higher time frame zone, guys. Higher time frame zones. If it was someone who could have sold here, you see, and look what happened. Look what happens next. Price quickly takes you out. Price quickly takes you out, bruh. It takes you out very fast. You see? See? It would have taken you out. So the what about us traders who know market structure and we know how to identify those key areas, where you know that okay, the market will reverse here. You have a high probability of the market reversing at these areas. You know. So what do? I go to the lower time frame after seeing that okay, price reverse at this key area, this supply zone which is here. So let me switch on to the lower time frames. I will just go to the H1. After the H1, as for me, I enter aggressively. You see here, this is the refined H1 supply zone. You know what? As for me, I just go in after I know that okay, price there is a bearish engulfing candlestick pattern here. I would have entered and my stop loss where? My stop loss is just above this zone. Just above this zone to be safe. And you know what do? I target where? Where do I put my target? So my target is just there, down there. My target is just down, down there. You see where my target is. There is my target, guys. I know this low will go. So, no, that way I would have entered aggressively. Because I know price tapped into the key zone and there is a bearish engulfing candlestick pattern. That is where I would have entered, guys, aggressively. So I don't waste time. I just entered after this candlestick, but after this candlestick pattern. which is a bearish engulfing candlestick pattern. Then I sold here. So now what do I do now? If I want to enter on a lower time frame, which is maybe M15 or M30, what do? I draw another key zone here on H1 and wait for price to come back at this zone to enter my second entry. That one is a confirmed entry, guys. That is the one that I'm teaching you now. So if price comes back at that zone, at this zone, then I'll place another sell here. So let's watch now. Check now. Check now, guys. Check now. So see, price has approached this area on H1. So I draw that supply zone there already. So now where would be my second entry? So my second entry would have been here, same stop loss at the same area, guys. So, and I will target the same down there, guys. The same zone, the same low that I would target for take profit, guys. And look at the risk reward ratio, guys. Look at the risk reward ratio. Look at the risk reward ratio, guys. I would have target here because I know that low will go because the market is aligned on a lower time frame, is aligned with a higher time frame. Wait for price to align with the higher time frames, guys. So I would have entered a sell there. Let's play price one more time. Okay, that is where I would have entered. Okay, now let's move to M30 and see what is happening there on M30. On M30, you can obviously see the zone that I drawn. You can obviously see the same zone that I have drawn. And see, let's wait and see if price would respect that same zone now. Let's wait and see if price would respect the same zone. So check now. Check now, guys. Check now, guys. Check what the market does, guys. That is when you know that the banks, the big banks are in the market, guys. That is where you can see that, okay, the banks are in the markets. When you see what? When you see this larger candlestick, when you see this larger candlestick, you would know that the big banks, they are in the market. But if you are just seeing these smaller candlesticks here, those one, leave them out. Just be patient and wait for the big banks to enter the market. Now, I would have entered here, guys. But to make things easier for me, I would have entered on the M15. Check, just watch. This is the M15 zone. M15 zone. M15 zone. It's well. Let me make another color. So I would make it red. So I would make it red. Let me make it another color, man. Maybe blue or yeah, blue. Okay, you see, you would have on M15, you would have entered on M15 there. Me, I entered on M30. So you would have entered here. Look at the stop loss, guys. Look at the risk reward ratio now. Look at the risk reward ratio. 1 to 9, guys. 1 to 9. You would have entered there. So as for me, I've entered on M30. M30. This is where I've entered. So now let's move. Let's move now. As you can see, the market now, the price has moved now. Price has moved. drastically. Now it moved, it aligned with a what? With a lower time, with a higher time trend, guys. With a higher time trend. Hmm? Guys, like the video, share the video, comment down below, guys. Comment down below if you have any questions regarding what I'm teaching you here. So now let's see what is happening here. Now let's see what if price would hit our TP. So let's just wait and see. Okay. Now let's play price now. Look at those candlesticks, guys. Look at those candlesticks. TP smashed. TP smashed, guys. TP smashed. Hmm? TP smashed, guys. With no stress, guys. If we would have ended there, guys, you wouldn't be in a stress. You wouldn't be in a lot of emotions, guys. You know why? Because you ended at the right zone. You ended at the right place. You ended at the right time when the banks are entering the market. That is where you would have ended, guys. Look here. Look here, guys. First, we draw the zone and we went to the lower time frame after price tapping where after price tapped into that zone. After price tapped into that zone, that is when we decided to enter aggressively and we made our second entry on a what? On a lower time frame, guys. Two trades, winning trades, guys. Two winning trades. Guys, like the video, share the video, comment down below, guys. You subscribing to my channel, liking the video and commenting down below, it will motivate me to create another video. So if you have any suggestion on what to talk next, guys, comment down below, guys, where you don't understand. So bye, guys. Thanks for watching.